So, welcome to this seminar on activity-based costing, which is part of F5 and comes up fairly regularly in the exams. We need to be able to identify the change which will happen in the cost and therefore the margin, usually the profit, when we move from absorption-based costing through to activity-based costing. We need to be able to work out the costs under a completely normal absorption costing system, usually based on machining costs in most of the exam questions, and also to then redo that, recalculate that when we have absorption costing based on activities and identifying the drivers which drive particular parts of the overheads so that we can then work out a more meaningful cost and start to see the impact on the margins. So, we have some material here. The activity-based costing starts off by looking at the idea of unit costs. And you can see here that it's very useful to know or to have some idea of the costs involved in producing an item and bringing it to market for various reasons. First of all, we need to make sure that when we set the selling price, we are going to make a profit. It'd be fairly pointless if we price a product at less than cost and make lots of products only to make losses. Now, we'll look at pricing in another seminar, and that will obviously depend as well on what the customer's willing to pay and what the competition are pricing their products at. But certainly we need to make sure that in the long term our products are priced with a selling price above the costs incurred. It also means that we can then say which products are worth continuing with and which ones need to be looked at again, which ones we need to maybe focus on the costs and think about cost reduction, which ones we maybe need to abandon altogether, or maybe just which ones to alter the pricing structure on. We can think about where the costs are a little bit too high and think about target costing, for example, which again we'll think of and think about in another seminar. The problem is, what do we do about the fixed costs? It's very relatively easy anyway to look at the variable costs, to look at the labour, look at the machining, look at the material and identify how much is required for a particular product. But with fixed costs, they are by their nature often periodic costs across the whole period, across all products, and dividing those up could make a big difference to the total cost of each product. And hence, deciding whether or not a product is viable or not, deciding what the price should be on each product, looking at the margin we're producing on each one. One possibility, which hardly ever comes up in F5 on its own, although we'll use the idea a lot in decision-making processes, short-term decision-making and so on in another seminar, but hardly ever just asked to do the profit analysis, is marginal costing. Now, under marginal costing, of course, fixed costs aren't absorbed into the cost units at all, and we simply look at the selling price or the revenue we produce and the variable costs to give us contribution, and as long as that contribution covers the total fixed costs, then we're making a profit. The trouble is, to get the selling price, we need to put quite a large markup on the variable costs because we have to allow not only for making a profit, but also for covering the fixed costs, which we haven't worked out on a per unit basis. So here's an example, example one down here. The company's got three products: direct materials, direct labour, and a selling price, and we also have the budgeted production. Variable overheads as well are incurred at $4 per labour hour. Total fixed overhead is $1.71 million. And they want us to calculate the contribution per unit, notice, not the profit per unit, on each product and the total profit made by the company. So what would we do? Well, we've got P, Q and R. On each one, we're going to have material and labour. The cost relates to labour, and for a service company, if you are trying to reduce the time spent by people on a service, that may well impact on the quality